guys, your girl Sue here once again. I am so excited at what we have to share today. 2 years ago, institutions owned barely over a third of SoFi. Today, it's roughly half. Tens of billions of Wall Street dollars voting yes. In minutes, I'll show you. 1, where the jump happened. 2, who's buying. 3, why sentiment flipped. 4, the tightest quotable sound bites, and 5, the big if that could send this even higher. In late 2023, institutional ownership was in the mid-30s%, worth about $3.3 billion at year-end prices. Today, around 49%, and the institutional stake is roughly $17 billion. That's a structural shift in who holds the stock. The top holders read like a who's who: Vanguard, BlackRock, State Street, Geode, plus multi-strategy and quant powerhouses like D.E. Shaw, Two Sigma, Citadel, Marshall Wace, and big custody managers like Northern Trust and Schwab. Together, institutions now control roughly half the float. This didn't happen by accident. This achievement resulted from strategically using key levers that attracted institutional investment. First, profitability was established, shown through GAAP profitable quarters, showcasing financial health. Second, a shift occurred towards fee-based revenue streams, complementing lending. Third, member and product compounding fostered stickier unit economics, indicating customer retention. Fourth, guidance credibility was built, providing a reliable model. Finally, balance sheet discipline was maintained, featuring deposits that lowered funding costs. Here's why a rising institutional base can be a tailwind for holders. Stability. Model-driven flows can dampen knee-jerk volatility. Liquidity. Tighter spreads and smoother execution. Valuation support. Steady rebalance bids can buttress dips. Index effects. Automatic demand from factor/index rebalancing. Governance. Large stewards push capital discipline and transparency. Research flywheel. More coverage, clearer narrative. Capital access. Often lower cost of capital. Borrow dynamics. Bigger lendable pool equals healthier short market. Here's the inflection point. If SoFi gets added to the S&P 500, the institutional wave could become a flood. Every major index fund, ETF, and benchmarked pension would be forced buyers by mandate. That can lock in higher liquidity, tighten spreads, and anchor long-term demand from the same giants already holding nearly half the float. Historically, inclusions often see a short-term pop and multi-year ownership stickiness. Inclusion isn't guaranteed. It depends on profit streak, market cap, and float. But the recent trajectory keeps SoFi in that conversation. Ownership climbed stepwise, mid-30s, low 40s through 2024, 50% in 2025. As beats repeated, margins improved, and visibility widened. Several trackers clocked millions of incremental shares added by large funds mid-2025, matching that up curve. Index a pause-friendly grid of top 20 long holders from the latest filings. Vanguard and BlackRock up top, then a long tail of quants, factor funds, and active managers. Index anchors help stability. Systematic and event-driven players add volume around catalysts. Balanced view. Macro funding costs and credit cycles can pressure growth and NIM. Execution on platform monetization and loss rates must keep trending right. And after a run, valuation trims can happen regardless of fundamentals. If this helped, hit like so more investors see it. Comment and subscribe for the next SoFi deep dive.